If you've been paying any attention to the news and the economic turmoil that's been swirling around out there, you know that the recession fears are at a heightened level. And with the Trump tariffs and the stock market softening and just the overall vibe out there, one can only wonder what the future holds, not only for the economic landscape as a whole, but what could all of this mean for the housing market? And that's what we're going to dive into today. And I'm going to share some information with you today on a broad level, and then we're going to dive deeper into the Charlotte market specifically. And as I share this information with you, my hope is that I can shed some light on the truth, meaning I'm not going to tell you that right now is the best time to buy a house. In fact, I've never ever said that in any of my videos. So for some of you watching though, maybe it is a good time to buy, and for others, it's just not a good time to buy. I can't make those decisions for you. All I'm here to do is give you the truth and the facts of what is shaping the housing market right now and let you decide what's best for you. And if you're new around here, my name is Brian Taylor and I'm the owner of Dreamline Realty right here in Charlotte. Thanks so much for tuning in today. And if you find this information valuable, please like the video, subscribe to the channel, and drop a comment below. I would love to hear from you. To kick this off, let's take a look at an article from Realtor.com, and then we're going to weave our way through some Charlotte data and hopefully get you grounded on where the real estate market currently sits. Now, this is a little bit lengthy, guys, so hang in there with me. It's not awful bad, but hang in there with me. There's going to be some really good nuggets in here that you're going to get some value from. So Realtor.com published this article on April 9th, and it was titled, "What a Recession Could Mean for the Housing Market." It says, President Donald Trump's new tariffs have raised fears that a trade war will plunge the U.S. economy into recession, which would have major implications for the housing market. JP Morgan Chase CEO Jamie Dimon, who was previously supported tariffs, said on Wednesday that recession is now a likely outcome as households pull back on spending in response to their shrinking 401k and investment account balances. Following Trump's Liberation Day tariff announcement, JP Morgan analysts raised their forecast of the odds of a global recession to 60%, up from 40% just a few weeks ago. Likewise, Moody's Analytics chief economist Mark Zandi raised his recession outlook to 60%, and even billionaire hedge fund manager Bill Ackman, a vocal Trump supporter, warned that the world is on the brink of self-induced economic nuclear winter. Boy, that sounds pretty wild, as he pleaded for the president to pause his new tariffs. Carrying on, it says recessions are typically marked by a slowdown in hiring, an increase in layoffs, and a rising unemployment rate. Although recession fears are rising, it is not a guaranteed outcome. Trump has insisted that his plan will boost the U.S. economy, and he may strike beneficial deals with key trading partners, reducing the economic fallout from his tariff scheme. Still, even economic uncertainty can affect the housing market, giving homebuyers pause as they weigh what could be the largest single purchase of their lifetime. It goes on to read what a recession would mean for home prices and home sales. So by definition, a recession brings higher unemployment, increasing financial strain for many households, and as a result, buyer demand pulls back and home sales fall. Falling buyer demand would put downward pressure on home prices as for sale inventory starts to pile up and spends more time on the market. However, the housing market is already fairly soft, with home sales near record low levels. Last year, home sales were the slowest since 1995, and early data from this year has shown little improvement. According to Realtor.com's March housing data, inventory is nearly back to the pre-pandemic average in the West and South, where it is down just 2.1% and 3.2% respectively. Regions with more home supply, such as the South, would likely see home prices fall more quickly in a recession as buyer demand pales in comparison to already ample supply. Although a severe recession can force some homeowners into selling because they are no longer able to afford their mortgages, most current homeowners, 54% of those in fact, have a mortgage with a rate below 4% and are relatively well equipped to make their housing payments. Home builders, however, who are already facing cost pressures from tariffs, would likely pull back sharply on new construction in a recession, exacerbating the existing housing supply gap. In short, the impact of a recession on the housing market could be noticeable without being catastrophic. and primarily an extension of pre-existing trends, which are fewer buyers, rising inventory, and softening prices. Even if homes were to lose 10% of their value overnight, aggregate homeowner equity would still be at 69.5% of total value, similar to where it stood in late 2021. So let me take you back to this line in the article, and then we're going to talk about Charlotte data specifically. The article said falling buyer demand would put downward pressure on home prices as for sale inventory starts to pick up and spends more time on the market. We'll take a look at this data here from Canopy MLS for the Charlotte market in March, and I'll show you exactly how true this is. Here are new listings. They are up 15.5% year over year, and in the month of March, they were at 5,676 new listings. And if we compare that to February's count of 4,464, guys, that's 1,212 new listings in just the last 30 days. Now let's take a look at closed sales. They were down 2.9% year over year and also down 23.8% year to date. In fact, this brings me to another point. Take a look at this excerpt from this article from USA Today. On April 24th, the National Association of Realtors reported that sales of previously owned homes cratered in March. The annual pace of sales during the month, 4.02 million, was lower than the full year tally for 2024. So guys, catch this, which marks the worst year of sales since 1995. That tracks with the recent report from Redfin that found that homes are taking the longest to sell since 2019 and fetching fewer bids. Supply is climbing, demand is sluggish, and some properties are overpriced, Redfin said. And speaking of houses taking longer to sell, let's go back to the MLS data and look at days on the market in March. Homes in the Charlotte area took an average of 55 days to sell. That's a 31% increase year over year, and days on the market has remained over 50 days since January. And shifting gears back to the last section of the article that we were just looking at, it says what a recession would mean for mortgage rates. It says mortgage rates typically fall during a recession as investors shift their money to bonds for reliable returns as they ride out uncertainty. This drives up bond prices, lowering yields. Mortgage rates tend to follow the yields on 10-year Treasury bonds. It says an economic downturn would also prompt the Federal Reserve to loosen monetary policy, resulting in lower borrowing costs. Although Fed policy primarily affects short-term borrowing costs, it indirectly influences long-term interest rates as well. And by now, if you've been watching my channel for any length of time, you all know how much I love talking about interest rates. According to Mortgage News Daily, today's average 30-year fixed rate sits at 6.82%. And while that probably doesn't get many of you guys excited, it is lower than it was a couple of weeks ago when we were at 7.07% on April 11th. So I guess time will tell how much lower we go, if we go lower at all. All right, guys, so let me leave you with this. My personal opinion is that the housing market is headed for a slight correction. I'm not expecting any type of catastrophic downturn by any means, but I do think home prices are going to soften and we'll see home prices come down just a little bit. I think the overall vibe out there has a lot of people holding back on making large purchases right now, such as houses, as we all wait and see what happens with the recession chatter that's all over the place right now. But I think we're going to see interest rates fall, and if the Fed plans on cutting rates primarily due to recession, we could get closer to 6.25 by year end. But with that said though, if the tariffs create inflationary pressure at the same time, the Fed might be less likely to do anything at all, especially in the near future. But either way, guys, we're all in this together. And like I mentioned at the beginning of the video, I'm not saying it's a great time to buy, and I'm also not saying it's a bad time to buy. That all comes down to your own personal decisions and where you are in your stage of life. A lot of people have to buy because they're maybe moving here from somewhere else, while others are just kind of in chill mode for a while. But if you need my help in your home search, give me a call or scan that QR code on the screen. Schedule some time on my calendar. We'll meet on Zoom, put a face to a name, talk about your time frame and your situation and whatever else I can help you with. There's also a link in the video description below. That's all I got for you guys today, my friends. Thanks for watching, and as always, make it a great day. Don't forget to like and subscribe. Catch you in the next one.